welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site, we have Amy Zhang. She's the senior vice president and portfolio manager at Alger. We're going to discuss why now is the time for investors to think about small cap growth. Amy, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me, Jill.
You got it. In 2022, we know it's been a challenging year for all types of investors. Why should investors think about owning small cap growth right now?
Well, first of all, small cap growth is a very inefficient space. It's very under the radar and less covered by the street. So there's a lot of discovery value there, and that which makes it fertile ground for active management. So regardless of market gyration, there's always opportunity for alpha to be generated in that space. And also, small cap growth stocks, unlike small cap value stocks, they are less impacted by the macroeconomic growth because most of them have idiosyncratic drivers. They usually have something truly differentiated, can gain a lot of market share in a large and expanding addressable market. So they can grow on their own, growth will be scarce, going forward as we are heading toward a soft landing or hard landing. So that's very important. Right now, we think there's a big disconnect between the fundamentals and stock price in the small cap growth space. Especially the small cap growth has never been this cheap, since 1998. In fact, the small cap S&P 600 small cap growth index is trading at nearly 25% discount to S&P 500. So that's usually historical. It's always traded at a discount, premium. So to that extent, we think it's a huge disparity there. Last but not least, U.S. small cap growth companies tend to have a lot more insulated from geopolitical risk because they're largely US-centric. So that's why we think that the attractive valuation plus resilient fundamentals form a very powerful combination. So that's why we can make a strong case for US small cap stocks now.
Amy, how does your approach different from other small cap active managers out there?
Oh, we have a very unique approach that we invest differently from our peers. First of all, we define smallness in terms of revenue because we think revenue is a better indication than market cap. So generally, we look at companies with 500 million or less operating revenue, a lot of times a lot less. So we're looking for revenue to double in 3 to 5 years. And so there's a lot of small numbers for alpha generation there. Also, we're benchmark agnostic. We don't own household names. So as a result, we have very high active share. And our clients would say we always act as excellent diversifier for their portfolio. And we're also very long-term. At Alger, we are stock pickers, and we take a long-term view. We spend a lot of time differentiating between bumps in the road versus permanent impairment fundamentals. That has served us very well. So because small companies do not grow in a straight line, there's always step function. So we really try to capitalize that growth not priced in a very early stage of a company's corporate life.
What characteristics do you look for in a company specifically in the environment that we're in now with an economic downturn?
For our portfolio, several of them are listed on Nasdaq Fund Network. We really look for companies, first and foremost, have very strong competitive moat, wide and strong moat that will allow them to sustain revenue and profitability growth. We also look for companies' management that can balance growth and profitability. And very importantly, we really care about a company, the strength of company's balance sheet. Most of companies have very little debt. So all of those allow them to have pricing power. In this inflationary environment, I think it's very beneficial, and also have less debt will do well. Those companies will do better. They can fund their own growth in a rising interest rate environment. We always say, our companies are like motorboat. Those are the companies that can control their own destiny, and they can propel forward in various economic conditions, which is different from cyclical companies that will, you need a strong economic wind, otherwise will struggle in an economic slowdown.
All right, Amy, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.
Yeah, thank you.